and welcome to The Trade. Well, before we get into the technicals, a quick look at what traders are watching, with US President Trump saying that America would bomb Oman if it interfered with the US blockade in the Strait of Hormuz. When asked if he'd seek an extension of the Memorandum of Understanding, which was signed in June and expires on Monday, the US President said no. Reuters is reporting that a senior Iranian official has said that Iran has decided to shift its policy from a defensive to a fully offensive one. On the data front, home builder confidence in the US rose slightly. However, it's still weak, with elevated costs weighing on the overall housing market. And the New York Fed Manufacturing Index rose from a reading of 15.6 to 20.6, helped by business investment related to AI. We saw Treasury yields rise, with the 10-year at 4.7%, while Australian 3-year government bond yields also rose, with the 10-year at 5.08%. The US dollar index is looking like this, with the Aussie dollar at 71.1 US cents. Tim Waterer from KCM Trade telling me we could get to about 72.5. Let's take a look though at what the charts are telling us, with Peter McGuire from trading.com, who joins me now. Always good to see you, Pete. Let's get your indication then on what we're seeing with currencies, and you're looking specifically here at the US relationship with the Japanese yen.
Yes, good morning, Juliet. I tell you what, it's been very dynamic, hasn't it? And the lead in from what you mentioned as far as US dollar, what we're seeing as far as about a 99.50 at 4 sort of handle. The yen, you're running around about 159.34. Be conscious of the big picture as far as 10-year. Their yield, Juliet, is just extraordinary. 10 years at 2.94. It's up from 1.57 12 months ago. That just gives you an idea as far as bond yields from the BOJ. And investors now seek probably less than a 31% probability of a rate hike in September by the Fed. You're looking as far as where the Japanese are situated. They view a September BOJ rate hike as the most desirable outcome, especially after coordinated intervention efforts failed to provide lasting support for the ailing currency. We saw intervention. Scott Bessent, the Treasury Secretary, it's far from range bound, and it's offering really exciting moves, but you've got to be conscious. If you see intervention, it can really smash things around very quickly, Juliet.
Absolutely. The other exciting move is the US euro, or the euro to the dollar, I should say, trying to make a move against one of its barriers here. What is that showing us, and is it going to break through this trend line?
Well, you're looking at 115.60 sort of barrier. Kept the bulls on the sidelines through August. With the pair gaining strength above the 2026 resistance trend line and its 20 and 50-day simple moving averages, there's potential for further upside in the near term. The big picture is, where does the Fed position itself as far as rate policy and, of course, the euro policy from the Bank of the ECB. So, you're looking at the RSI, it's turning higher with bullish area. Likewise, the stochastic oscillator is shifting upwards. The MACD is resuming its advance above its red signal line, all pointing to constructive sessions ahead. The jury's still out, but I think there's plenty of movement in the short to medium term because of volatility, Juliet. And it's never, when you're looking at the chart over that period of time, it never fails to disappoint.
It certainly doesn't. All right, the gold movement here, a constructive outlook because it's sort of getting back towards records. What is behind the rally, and where do you see it going?
Well, 12% or 12.5% up in the last month. 17th of July, it was sitting at 3998. On the futures now, the front month, it's looking at 44.90 sort of number. So that's an enormous uptick. And if you're looking over a 52-week window, Juliet, we had a low of 33.50. We've had a high of 56.26. So it's about mid-term at the moment, and I think it's onward and upward. Again, waiting to see what's happening as far as Fed policy. The fifth consecutive meeting, keeping interest rates unchanged at 3.5 to 3.75, as widely expected. I'm pretty sure that you'll see, the gradual uptick, sustained strength and acceptance above the 44.15 sort of handle could allow gold to test 4,500. It's knocking on the door. I think it'll be there certainly this week, targeting 45.27 and then up to 45.75. I'm calling 4,600 achievable by month's end. I think we could get there a lot sooner than that, Juliet.
All right, and I want to ask you your thoughts on where the Aussie dollar goes, Pete.
I think it's going up. Probably where it's sitting at the moment, you're looking on about 71.10. I feel as though it's probably got more upside over the next couple of months. Again, what happens is Jackson Hole, what Fed Chair Warsh's sentiments are. I don't think we're going to see a rate hike here by year end. But overall, I think by the US not having a rate hike, that'll probably add more downdraft to US dollar, upside for Aussie dollar. So yeah, maybe a 71.50 to 72 handle in the short to medium term over the next quarter.
All right, Pete, excuse me, always good to chat. Peter McGuire from trading.com. That does it for this edition of The Trade. Be sure to join us next time.